Okay, ladies and gentlemen, my name is Emma Radi as usual. Now I want us to learn something here, how you can simply trade sport and features such that you maximize your profit, ladies and gentlemen. Using what we call features trading, we have what we call leverage, and we have what we call the percentage, and we have what we call the spot percentage, and we have capital, and we have the profit. Now if I measure from here, let us assume that I had used this coin to trade it. Now we can be able to see that this coin closed above 61. Let us assume that that was my approach to this coin. I decided to trade it after closing above 61, and we all know that whenever the market moves from 0 to 61 and closes above that point, it normally move to the 100 point. Okay, therefore after seeing this market closing above 61, we are pretending that we are going to enter the market. We want 1% or 2%, and therefore this percentage you are seeing here, it is 2%. Now 2%, it is the percentage that we are going to get from the market. Are we together? Now next part, we have to think about leverage. This is what we call the risk management. If you put 10, if you put 15, if you put 20, know that your risk management is getting high and high and high. Are we together, guys? Therefore what we need to do is to know what is the percentage, that rather the leverage we are going to use. So for example, if we use 5x, it means we are going to do what? We are going to get 5 times 2, which will be 10, meaning we have 10 percentage profit that we will get. And now this time we are investing only $30. So what is the $30 of 10%, or what is 10% of $30? Automatically it is $3. Are we together? Let me hope everyone is following, guys. Yes, for those who are watching us from YouTube channel, thank you so much. You can keep commenting as you're asking your question. You keep liking. Yes, automatically we'll always check your comments and we reply the questions. Are we together? For those who are following me on Google Meet, thank you so much. Thank you for attending class. Let's keep moving. So therefore, since we have our 5x, it means 5 times 2. Are we together? We get 10. The 10 we are getting, it is the profit that we will collect from the market. Our capital is only $30. Yes, following the markets, rather the risk management, and we expect to collect only $3 from the 2%. In normal trades on spot, let me show you what you could get. In normal trading, 2% of $30. What is that? 30. You could definitely get 0.6 on spot trading. Are you getting the difference? But this time we are getting $3 trading features trading. Hope you are getting the difference. Now remember, when you invest the 30, they will borrow you money. That is features trading. They will borrow you money. That's why you are getting too much profit from the $30. And don't forget that if you put too much leverage, they will borrow you too much money, where that money will affect your trade. How? When you are losing, you will lose too much, and you will lose quickly if you use too much leverage. Avoid too much leverages. Are we together? Put small, and please make sure you use 10% or 20% of your capital to invest in the market. Don't use too much money. You get the point. Use 10% of your capital or 20, such that you can have money on balance which will be used to control the market when it is against you. But remember, if you had invested $20 and on balance we have $80, do you know that the chances of losing the 20 is too low because we have the 80 and 80 is greater than 20? That is the logic. Make sure the balance is greater than the money that you invested. Are we together? So guys, if we measure, before we measure, when we look at this market, let me first put off this. When we look at this market, this is the highest point, and we are seeing this market again touching the same area, meaning this is what we call the double top. So this market is likely to drop down up to this level. Are we together? Are we together on that? Let me remove this one as well. Okay, so it is supposed to be like this. Now when you observe at this point, here, are we getting the point? When you observe at this point here, we can be able to see that that point was the support area. It was the support area. Since it was our support area, we expect if this market fails to break the previous high, it means we are likely to see this market simply dropping down up to the support level. Are we together? So therefore, what we need to understand from here, it is to understand the market structure. Before you enter the trade, what do you normally consider? Before you enter the trade? You must know the area of interests where the market is likely to go, and that is the point of interest where you are supposed to target as well. Are we together? So therefore, from there we can be able to look at the market. Since we have the double tops here, we expect the market to drop down and come back at this point. Are we together? But before that, let me show you something. Now here, after entering the market expecting your 10%, you must have margin calls up to this point. You must have margin calls up to that point. So we measure. Both those are trading on futures and spot. When we measure, we can think about 90% drop. 90% drop. Therefore, you can decide to use the double up strategy as you are trading futures. You can decide to use the double up strategy as you are trading what we call the spot trading. You get the point? Now therefore, we must look at this drop as an important area where we expect this market can definitely drop. You get the point? Meaning I can, after confirming here that the market is dropping, I will come and short the market. Remember, I had pressed long position. I'm longing the market. Now this time I'm shorting it at the same time. That's why we encourage you to use the hedging mode. I think for those who are in class on Google Meet, you are following. Okay, now the first position was longing, but now we have realized that this market is no longer interested in moving upwards. Therefore, we are going to short the market. Make sure when you are creating your account on Binance, please turn on the button of hedging, you such that it can allow you to trade in two directions at once and in one asset. Yes, you can buy Solana, you long it, Then after seeing that the market is against you, you short it. That's what I'm trying to mean. That is what we call hedging mode. Are we together? So therefore, if I can come here and short the market, meaning the loss I will be in when the market is dropping. Remember now this time I'm in loss because I was expecting this market to move up, and now it has started to drop down. Therefore, I will be in loss in one position. Then in another position, I will be in profit. Are we together? Meaning, the loss that I will be making when the market is dropping down, it is the same profit I will be making when the market is dropping down. Are we together? I have one position which is moving up, or it is in buy, then another one in short. In buy, I'm in loss, but in short, I'm in profit. The man I will be losing in buying, it is the profit I will be collecting in shorting the market. Hope I'm making some sense, guys. Okay? Now, it means I can be able to know how many times am I going to buy. With 90% drop, I can definitely buy only 2 times. I'm buying 2 times. Why? Because the percentage is small. I'm buying 2 times, both on spot and features. Any. Now, I still have this drop up to here. In case if we break here, we are likely to come at the bottom or at the discount level. Are we together? Now, like I told you sometimes back, but please make sure whenever you are dealing with the uptrend, the retracement will always be there. Oba ochagala, oba tochagala, whether you like it or not. The retracement will always be there. Therefore, what we need to look at, it is like this. What we need to look at, it is like this. When we are in uptrend, market will have to move. That move, we call it impulsive move. After impulsive move, we expect the market to drop down or to retrace. By retracing, this market is supposed to retrace halfway of the distance, whereby this time we have this point here, we have this point here, and we have another point here, whereby market will have to come back halfway of the distance, which is at that point. And now we expect the market to move from here up to this point, meaning following the market structure, you will be perfect. Another thing, expecting market to retrace, you will be on point, because as a must, whether you like it or not, the market will always retrace. Are we together? Now, from there, guys, from there, what we need to do is to know the point of interest whereby the market will be retracing at that point. Now, that means we are likely to enter from there, expecting market to go back to the highest point or halfway of the highest point. That's why I shared this signal at this point, expecting to get 3% before we hit the halfway of the distance. Remember, always take profit. Always take profit. You get a point. So, at that point, we traded this coin expecting the drop up to that point, whereby at that point it was the demand level. At that point it was the demand level. So we could put the margin calls which are enough up to that point. Are we together? So from there we can definitely trade and enjoy the market. I'm going to show you something small down here. Now, the market is always moving in this way. Are we able to see this? This was the journey of an uptrend. It was the journey of an uptrend. Since we had our lower low, higher low, and higher highs. Are we getting the point? Now, for you to confirm the short market, we must break this point, which is higher low. Am I talking sense? We must break that point, which is the higher low. Since we had our higher high, this market is supposed to come and break this point for us to confirm the short the market. That is the confirmation. That's how we get it. And I want to show you something here. Okay, from there, observe well here. From there, this market will break this level, and after breaking, it will make what we call, or it will form what we call lower low. The first low, you will experience what we call the change of character immediately after breaking this. That's where the change of character will be. Okay, so from there, the market will definitely form what we call the lower low, and immediately after forming a lower low, my dear friend, you are supposed to watch this market until we test the resistance line, which is coming from the higher low at this point. Are we getting the point? Market will break it and it will come back and test this line. Hope you are seeing. And here it is where our entry will be, whereby this time we are shorting the market. This time we are shorting the market, and your target will be where the market was coming from. Market was coming from this point where we had our lowest point, and we have entered here by shorting the market, expecting this market to go back to the lower low. Are we getting the point? That's how we can simply identify how to short the market and how to buy the market. While adding, please don't forget that risk management is so important, ladies and gentlemen. Don't risk too much. Don't put too much leverage. It will definitely lead you to lose all your money, because the more the leverage, the more the risk, the more the loss. You get the point? So that is it, and that's how you can definitely enjoy the trade. And now you have seen the difference, that here our target was 2%. On spot the profit was 0.6, but on futures the profit is $3 using the 5x, or what we call the leverage 5. Are we together, ladies and gentlemen? That is the difference. And per now we don't have stop loss on Royochu, but I believe they will update it and we can simply have the stop loss on Royochu. Otherwise, that is it, and that's what I wanted to share with you, such that we can identify the points where we are supposed to enter the market, and the margin calls, how we can measure them, and such that we can know how many margin calls are we supposed to be having on this such a trade. You get the point? Because after learning market analysis, you can always know where are you supposed to be having your margin calls, and how many margin calls can you be having. You get the point? Because you will be knowing the area of interest, where we have the demand and supply, the resistance, the supports. You can definitely understand all those. So if you want to know more about the technical analysis, fundamentals, and everything concerning about market analysis, I will leave the WhatsApp number in description of this video. You can visit the description of this video, get the WhatsApp number, and you can contact us. We teach you how to enjoy market. Otherwise, MRD as usual, your crypto coach. Allow me to sign out, and I love you so much. Have a blessed day. Stay blessed.